Okay traders, today I wanted to do a lesson on just understanding the psychological aspects of trading, because this is honestly probably the most important part of trading, understanding why other traders are buying and selling where they are. And I want to look at the example of BPTH last Friday. Last Friday, if we take a look at the 10-day chart here, this one really started March off on a great note. BPTH right now, traders open at about 25 bucks, and now it's at about 31. So it's working it right now as well, but this one got March started off on a great note. It's been March Madness, traders, ever since BPTH took off last Friday. Now this got traders very excited over here. If we zoom in on Friday, now this is the 30-minute time frame here, it opened up at about 270 and closed right at about 750. This got traders very excited, guys, and we closed that day and we had our first red day. After the first red day, a lot of short sellers start picking up a short position. A lot of shorts get into it risking off of the previous close. So a lot of shorts are now getting into this, risking off of about $6. And this thing starts selling on off even further. 2 red days in a row. Now conventionally, if you have 2 red days in a row after a green day, the stock is going to have a hard time recovering from that. And I really think whoever came out with this PR on BPTH knew what they were doing. Now that's speculative. I don't know that for certain. But it was a great time to come out with a really good PR when a lot of shorts were in BPTH, because that's going to create a very massive short squeeze. So I want you guys to look at the daily chart on BPTH. Yeah, this thing went up to $73 because of the short squeeze, but if we zoom in to just those first few days, let's take a look at what the stock was doing. This stock starting in March had an incredible day, traders, from 250 all the way up to about 890 is its high. So it got traders very excited. The next 2 days straight, it really started selling on off. And traders, I really think it's critical to your trading, not only to understand resistance and support areas, buying and selling at these areas, but also understanding, guys, why are people getting in where they're getting in at? So we understand that shorts, a lot of them were moving in on the first day. BPTH had a nice little squeeze on it, but then when the backside was formed, and the reason it did squeeze from about 250 to about 890 is because a lot of shorts were getting in on the front side of the move. A lot of the shorts were getting in on the front side as it was going up, and they kept getting squeezed and squeezed and squeezed. Once the backside started forming, a lot more shorts moved in. This thing started selling on off. And then we had our first red day, and then the next day they were managing off of that previous close. So we had a lot of shorts in this now, guys. And most of these companies have no clue when to come out with their PRs. They're just throwing PRs out when they see the penny stock market's hot. BPTH, on the other hand, they had it right. BPTH, we came out with a good PR on it. After its second red day, we had a gap up and a squeeze even further, up to around $15. Now we have accumulated a ton of more shorts. This stock the next day opened up at around $18.50 and headed up to $73.52, traders. Okay, traders, now let's zoom in to its mega day, the day it went up to $73. Also, I'm going to go into sympathy as well in this video. I want you guys to understand sympathy, who's trading sympathy, and how to go about trading the sympathy stocks. BPTH, on Thursday, guys, of last week, this stock went from about $18 all the way up, traders, to $73.52. And I know some of you are thinking, who is buying this thing up at around $70? I hope very few people, or none at all. Most of this was probably shorts covering their positions. Now, it was probably some buying it as well. And let's take a moment of silence for those people. But traders, on BPTH, this is probably most of the shorts covering their positions. Now, understanding that when this stock gets scary, when it's just going up and up and up and up from $35, from $18 up to $73, when this thing's going crazy, traders, that's when you want to start taking your short position. When this stock has had green candle after green candle after green candle, and I know it's scary, traders, and in hindsight it's 2020, but euphoria always equals tears for long bias traders. When a stock looks like it's going up forever, that's the beginning of the end. You want to start shorting when all other traders are saying this is going to go up forever, and you want to start buying on fear. When traders are saying this thing's going down forever, you want to do the opposite. It's counterintuitive to what's natural to us. We want to buy things when they're just going up. Oh, this thing's going to the moon. It's at $73 now. It's going to hit 100. But to be a part of the 10%, we have to think counterintuitively. So after it hit 73, traders, this thing had a halt. That's why we see a gap down right here, and then another halt, and then another halt. We had 3 halts on BPTH, and then it really began to start fading on off again. Now, when we have a big move like this, there's a lot of sympathy plays, and traders, we've seen that time and time again, such as DRYS, the shipper, that went from $1 to about $100 a couple years ago. After that, all the shippers started moving. We had SHIP, DCIX, ESEA, GLBS, PXS. A lot of the shippers really started moving in that sector. Now, after BPTH, A lot of traders were eager to find the next one because they want to be a part of it. They don't want to miss it. It's what FOMO says to do, fear of missing out. I don't want to miss the next one. So let's get into anything and everything and just start pumping it on up and bag holding. That's something I want you guys to know. A lot of these traders, they start bag holding their positions, getting in early and holding the bag. Now, why are these long bias traders holding the bag? Because of BPTH. When a stock goes from a couple bucks to $75, you better believe that these long bias traders are all getting into the stock and holding it, becoming bag holders. Now, what's the problem with that? The problem with that is it's very crowded on one side, and that's what happens, guys. With BPTH, it was very crowded on one side, the short side, which caused a huge squeeze up to $75. But now when we're crowded all on the long side, guess what's going to happen? Just like we saw on the sympathy play, SEEL. This one runs up to $8 and all the way back down to $2 very quickly. And why does that happen? It's because it's very crowded on one side, traders. And that's really what I want you guys to understand about sympathy. Sympathy is mainly just long bias traders holding the bag as this thing goes up, 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 up. Now, can you make money off of sympathy? Yes, but when all the traders are crowded on one side of it, it's going to come back down very quickly as they start selling on off, it's fading even more, and they just continue to sell and sell and sell. BPTH was crowded on the short side. That's where we had to move up to $75. SEEL was crowded on the long side as long bias sympathy traders were trying to push up the next stock because they did not want to miss the next opportunity. I hope you guys learned something from this video. Please leave in the description if you learned anything and also your thoughts on the psychological aspect of trading, because it's much more important than a lot of traders really give it credit to. Traders, go ahead and smack that like button, and guys, if you haven't yet, go ahead and hit that subscribe button. We'll see y'all tomorrow.